Happy Monday morning to everybody. Quick sound check before we roll. Thank you. Okay. What we've got is relatively straightforward. Okay. 406.85, that's our early pivot, if you will. Below there opens the door for 405.75, give or take, down to the famous 404.50, which comes from the daily chart, not that, but that. And that's our breakup candle low. So we're going to note that in the back of our mind. It's not a daily number per se, but the first time down, if they get down there, generally speaking, there will be a bull-bear battle in that spot, okay? So the zone becomes 405.75 to 405.50, so it's $1.25, all right? Don't know that they'll get down here right away, but this is a number of importance. So they should react from it, and if they don't, the backup is the backup, okay? If they stay above 406.85, then they can certainly float them up a little bit. Not sure about 408.85 all the way up there, but just, you know, the bulls will try and bounce the tape. Just leave it at that, okay? Is the sound okay, or is it one person that has bad sound? Let me hear. Okay, sounds good. Jerome, maybe log out and back in real quick. Sometimes that'll fix the problem. Could be an internet issue. Sounds good, everybody. Sounds good. Thank you. I got it. Thank you. Okay, so let's get that resolved before the open. That's it. That's all we've got for now. A few stocks on the move. See if anything's close. Capital One is not close. Apple is not that far. $1.50. No, $1 away. Not even. Yeah, Apple's coming in. AMD's a couple of bucks away, and Tesla, where's Tesla? Not close yet. Some opportunities on the board, okay? Yeah, the zone of support is 405.75, give or take, to 404.50. That means for a bounce back in the other direction. And in this case, when I say give or take, I'm not talking about 406.10. I'm talking about, you know, sometimes they'll come up short. 405.85, 405.84, 405.80. That's the give or take, just so everybody understands. Not saying they do, not saying they will. I'm not a buyer in front of it, but I know some traders are, so I give you the concept of what I'm looking at. We talk about it all the time. Sometimes they come up short, sometimes they spike them through. Those traders itchy to get into the trade that are willing to buy it a little bit in front. That's okay. It's not the worst thing in the world. We're talking pennies. We're not looking for 2 points. We're looking for a bounce back of 7 points, 70 cents, $1, 10 points, 8 points, something like that on a trade like this. Back to 406.85, for example. 20 seconds to post time. And they're off. We'll see what happens. So they open below an important place. So either they recapture it, they'll definitely run a test. Obviously, they're going to run a test right now. That's 406.85. If they can't get above, they'll fall. There's your test. I'd say test the pivot. Now we'll see. Who's in control, bulls or bears? All right, let them fall. 405.75 is the first buy opportunity. Just patient, just watching them. We don't get excited. We don't get jumpy. If they do the thing, we do the thing. If they don't, we'll wait for the next thing. That's the way this works. Could they stop short at 406? It's possible, but 405.75 is the number. Just put it in perspective for a second. One more time on the daily chart. This is still a pullback until they get below here in an uptrend. Still have another leg higher unless they get below here. That's the bottom line. So we've got that on our mind. I do. Hey, Kevin, I mean, that's later. That's if everything else fails. By the way, the 403.70. Sure, but later on, or maybe not at all. I have 403.10. That's my number for a different reason. The numbers and the cues are on the board, Ref. 314 is important, actually. They might bounce around a while. They may run another test of the pivot, but 405.75 is the number.
Apple's almost in its number, and Tesla's getting there as well.
That was from the other day. That's Tesla's number. Whoops. Is it 174.60? Yeah. Not there yet. 60.82. If the spiders get to their number at 405.75, Apple and or Tesla should get to theirs. That's the concept. We don't know they will, but you need a little bit of a push. Yeah. So the exact high, by the way, was 406.84 against 85. No accidents, no coincidences. Market is numbers based. The trick is, can you figure out which number they're headed to? That's the trick. Correct, Daniel. Yeah, it would have been. It's too early for that. And they were too close. Daniel's asking if the test of the pivot would have been too risky of a short, and the answer was yes. Let me take a look at the SMH. The daily chart, any moving average, well, it's not there anyway. Mine, I don't know where yours is. Mine's at 274.22. 247, sorry. Any moving average on a daily chart is not necessarily an intraday trade, but you notice where the number is, and then you try and find the number nearby. That's different. 248 today, if reached, should produce a bounce in the SMH. Here we go. The spiders are just bouncing around. Doesn't mean they will, doesn't mean they won't. They're just doing their thing. Not sure why you put that in there, Daniel. Well, it might after the fact, but it wasn't close enough. Maybe it was. I mean, who am I to say? The market will decide. But for me, it wasn't close enough. That was the part where I said they could bounce it at 406. 405.95 is the same as 406. But I was waiting on the number. Now, if they get above the pivot, 406.85, it changes the scope a little bit. That will take 405.75 off the table. Yep. Back above 406.85, we'll take it off the table. If that was it, that was it. They just didn't hit my number. Yeah, they have to stay above, Mike. Like 406.85, when I say get above, I'm saying, you know, a spike above is not reason to buy it. Staying above 5-minute close, 10-minute close, 15-minute close, coming back to test it, it becomes support that is a potential opportunity. So if they're not going to go any lower, we have to wait for them to provide the next opportunity. We can't just jump on board. It doesn't work that way. You'll get shaken out. I'm not saying you would have. I'm just talking to the group. Apple came close. Oh my goodness. Well, that's not over yet.
Came within a penny.
Yeah, that's not over yet. I mean, they could easily come back down. Don't you love when that happens? Again, the market's numbers driven. I'm not the only one that knows about the numbers. The market is the numbers. The numbers is the market. It's all one thing. There's your Apple. So now you got to make them go a little bit lower since they bounced a little bit in front. Should have said that earlier. There's still a support zone. Oh. Apple is bouncing. If the spiders get above 406.85, Apple will get back to 161.50 at least. It's very quiet. It's very slow. That does not bode well for the downside. That bodes better for a floater. What's a floater? It's kind of one of those situations where dips are bought, they kind of edge higher. At some point, they'll have a higher low situation, and they'll work their way back to the flat line at some point. That's kind of the day. That's what, not what to expect today, but what to expect on a day where there's a floater and there's a lack of sellers in the market. And that's what'll happen if they start getting above 406.85. They'll start working their way back to the gap. And when you look at an hourly chart, it's a long way off, and they may not get there anytime soon, but working their way back to the gap is what I said. Not get to the gap necessarily all in one shot, but work their way back to the gap. So see if they can get above. Not yet. See how it's still resistance until it's not, and how they come a little bit. What's the high again? 406.84. Anybody think 406.85 is important? Well, we certainly know that now. No, Daniel, that's not the correct mindset. We need to adjust that a little bit. If you miss a trade, it's not a big deal. And when you start to worry about missing trades, your mind plays tricks on you and you'll end up getting in trades that you shouldn't get in because you're afraid to miss it. So it becomes a full circle, and it actually is an important part of this process and learning. I understand missing by a penny is a little frustrating, but sometimes it's for the greater good. So if you missed Apple by a penny and didn't take it, and now it's lower, that's the way it worked. And that was in your advantage. If you missed something else by a penny, don't worry about it. There'll be another trade around the corner. I guarantee it. Can't guarantee much in this business, but I can guarantee there's another trade around the corner somewhere. I'm helping you, trust me. That's a hard question to answer, Anishan, because every time is different. And so the way I do it from a mental trading, psychological trading perspective, if something bounces away and I'm not sure how far it bounced away and it comes back to the number, if I have to really sit there and say, I'm not sure, just pass. If it's, for example, on Apple, we'll use Apple as an example. If it bounces 50 cents, it's probably too much. Bounces 20, 25 cents, probably not too much. But there's no set answer because there isn't. I wish there was. So you look at Apple as a good example. Bounced away a little bit. Look at a 5-minute chart and you could see bounced away a little bit. Not a ton, but a little bit. And then all of a sudden you say, well, did it bounce too much? Well, if I said, did it bounce too much? It did. That's the way I do it. Remember when I said before, now you got to make them go lower? Should have said that before. That's the reason. And this goes for obviously everybody also. When you can actually take trades only at the numbers you want to take trades at for the reasons you want to take them, and everything else just doesn't happen, your win percentage skyrockets. If you're honest with yourself, and I've done this many times, if you're honest with yourself and say, all right, should I really have taken that trade or was I partially guessing at minimum? And if the answer is yeah, I can be honest with myself and say I just wanted to be in the trade and I kind of guessed a little bit that it was going to do this and it didn't. Once you stop doing that, then you're almost home. This is a patience business. Very difficult to have patience. You have to learn to have patience. You have to have an alter ego telling you this stuff. So I'm not telling you any secrets, just stuff you're not thinking of sometimes. There's no magic. It all makes sense once you hear it. I didn't invent patience. So the question is, you take a look at this candle. Is this a retrace right in the middle? And they're going to shoot up? Or are they going to test the low and then spike the low and rip it back up in the other direction? I vote for the spike the low and rip it back up in the other direction. The next opportunity on the table. And if they do that, Apple may get to its second number, provide another opportunity. Meanwhile, I'll walk away for 30 seconds. I'll be right back, and maybe they'll do it while I'm gone. Hold on. Dice, still working on it. Yeah, let it go. Remember what I said before. They don't give you the first opportunity, which they didn't, right? They didn't get there. There'll be another one. They'll do something else. Now we're in the spike the low and rip it back up in the other direction camp if this is not a retrace. Nice call, Raf. IWM strong. Let me take a look around the horn. Transport's up, so that's relative strength in my two favorite market leading indicators. That's definitely a positive right now. That coupled with the fact that it's quiet. I don't think there's any economic data. Maybe there is, somebody will know out there. Not sure one way or the other. It's a different trade, Jerry, but it's the same trade, all right? So the 405.75 is 405.75 is still the same number it was before, but now we're just calling it a different trade. I like to call it the spike the low and rip it back up in the other direction because they do that all the time. So you have like another thing in the toolbox on this potential trade if this is not a retrace, which is a lot of times they'll do the spike the low thing. And by the way, since there's a number down there, maybe they'll just go take care of some unfinished business. And that's my thought process in the 405.75. Okay. CPI and PPI today? Oh, Raf, we're just talking about today. You're welcome, Jerry. Demas says final wholesale inventories at 10 o'clock. I don't know if that qualifies for economic data. That sounds like one of those numbers that gets adjusted 42 times. Yeah, we don't worry about Wednesday and Thursday on Monday. Not yet. Well, so far it's a retrace so far. Again, no change. 406.85 is the bogey. If they stay below there, the door really still is open. Yeah, you could say the reading time off the clock. Sure. Yeah, definitely. There's always something there's something with the banks, for sure. Well, I don't, JP Morgan's up, but there's still something with the banks. That's not cleaned up yet, trust me. Don't forget, bank earnings are the first big industry group to really come out for earnings season, which begins, I suppose, not even sure if it's later this week. I think it's probably later this week. All right, timing wise, it should be around this time. Within the first couple of weeks of the month, they start. So we can look it up later when JP Morgan, Bank of America, Wells Fargo, you'll get some insight because they'll have to report things that are risks to the balance sheet. So we'll see how the market takes that information in. Yeah, we talked about the SMH a little while ago. 247, I believe I said. I'll double check it. Sorry, 248. If I said 247 before it was an error, it's 248. SMH. That's the only buy area. Now, here it comes. Let's see if they do it. Spike the low and rip it back up in the other direction routine. No change from before. This is still a zone. The longer they're down here near the lows, the more likely it is that they'll do it. The quicker they do it, the better. We don't like creeping markets, right? Right. Just let them have a leg down, 25, 35, 45, 50 cents and bounce. That's what I'm looking for. Here comes that patience thing again. You just wait. It's like you're waiting for a bus. It's not there yet. You can't get on until it shows up. Or I guess in today's day and age, you're waiting for an Uber. Yeah, I just thought of that, Eric. It was just off the top of my head. I thought it was pretty cool too. No, it's not it's not what I like better. I'm giving you the numbers where the same thing should happen. Why is there a question mark in there? On the next line, oh, because you probably hit enter first. Okay, gotcha. Yeah, bounce again. They're just playing games. Same routine, above 406.85, and that was it for now. Armand, what do you think I'm going to say about consensus view? That's an interesting term. Do I typically go with the consensus view, or am I more of a contrarian to the consensus view? That's on you, Joel. It's up to you. It's the worst idea in the world. If the spiders bounce, you'll get a bounce. If they come down lower, you'll add at the number. And that's my guess as to what you were doing. And that's okay. Yeah, that's fine. Still in a zone of support anyway. Yeah, that's fair, Armand. It doesn't matter. This is a hard concept to wrap your head around. Let me update the notes real quick. I'll be right back. It was kind of a shame. So what I was going to say was the hard concept to wrap your head around is that, I can't remember. I knew that was going to happen. I'll think of it. Now, after two tests of 406.85, and here comes the third one, if they can't get above, then there's a fair chance they'll get below 405.75. They come back down again. But the flip side of that is, what are they up here again for? To run another test or to get above? We don't know yet, but there's a fair chance that they'll get above. And don't buy it based on what I just said because I don't know. But I'm just saying. The opportunity would be if they did get above and they came back for a retest, and you need a little time. They have to stay above for a little while. And if they take off, they take off. Maybe there's a short later. We'll see. So here's the other thing. If they never hit 405.75, if they don't do that, that's going to be a bullish sign. Now, you like to know that sooner than later. I get that. But the point is that they're leaving some unfinished business And if the bears couldn't push the tape down, the market down to that number, then the bulls, you're gonna see that they'll be in control and they'll shoot this thing up a little bit because the bulls were stronger than the bears at the lows, and they should have gotten to 405.75. And that's my concept of unfinished business and being bullish because they couldn't get there, at least for now. So I'm not going to be surprised if they start getting above 406.85 and go. They're going to try and recapture 407, which is very close by. But if they can recapture 407, that's also important. It's for a different reason. And it's interesting that Apple's going the other way. It's a little curious. Let's check on the Qs. Relative weakness in the Qs for sure. The IWM's getting stronger. So let's check them out. See this? Right now, I'll bet on this, pulling this up. Not directly, but you know, it's concept. Because it seems like this is more, not that there is a correlation, but I'm just for the purpose of this conversation, how I'm reading this, this is more akin to this than is this. So there's something different going on here, but the IWM is really my tip off. It's my favorite market leading indicator, and not necessarily always from an intraday perspective, but on a day like today, when you see this, you say, well, it's got relative strength. That's a fact. So we'll watch it. Start closing candles up there above, you see what's going on. So for now, we're going to say the downside's off the table unless they fall, but we're not going to bet on them falling. We're going to watch. What was a close here, just for argument's sake? 86. First they go to 84, then they close at 86 and they pull back. That's a really important number, I'm telling you. That's the whole day right here, or at least the morning. Right here, right now. Just reading the tape, just watching it. And I'm using what I've seen in my catalog of information to say what I'm saying. See, IYT, transports, okay, same as the IWM. So something's going on with my favorite market leading indicators, different than the Qs, and the spiders are kind of in the middle. It's interesting. It's a reversal of sorts. You know, they want to get to 224, 225, and you see the spiders moving. See if the Qs are getting a little happy. Maybe. Apple bouncing. Yep, there you go. Lagging, but bouncing. And I'm using Apple as a indicator of sorts, not the Joe's indicator shop type. Apple's a big stock. So if Apple's falling apart, something's going on under the covers. But if Apple's bouncing, even if it's got relative weakness, then it's okay for now. That's kind of the way I'm looking at it. All the same market concept comes into view, right? Everything bounces together for the most part, not every single thing, but most things. They all fall together for the most part, not all the time, but most of the time, and most things. You use these things as guidelines in how we look at the tape. Yeah, Daniel, I talked about that a couple of times. If they start getting above and they start closing some candles above, 5-minute, 10-minute, 15-minute, and if you can get them back at a retest of 406.85, give or take, that could be an opportunity. If they just take off, then they take off. That's the way you have to look at it. You can't look at it as a miss. Just look at it as they didn't do what was required for me to take a trade where I'm putting some of the probabilities that I'm going to be right in my favor. But if they just spike it and they come back down and you find them back at 406.50 in about 5 minutes, that's no good. All they did was run a test and spike it a little bit, suck some traders in, and then pull the rug out. You don't want to be party to that. And that's why we have to wait. Correct, Brad. That's exactly the point. You just wait for the market to do what you want. And if they don't do what you want, you wait until they do what you want in a different setup. So Dan was a front runner. Well, that's okay now. Maybe get a runner out of it. You could. A little bit, but you could see how Apple's struggling, which is interesting. And I'm going to assume the Qs are doing the same. Well, no, they're not. So maybe Apple is all of a sudden a one-off situation. We'll see. What's IWM doing? IWM still doing okay. Just a pullback. These highs. Garden variety stuff. Sound check real quick, please. Okay. Mark, I don't know what to tell you, Mark. You can't hear me. It's probably on your end. Thanks, guys. Okay, I got it. Thank you. Same deal. If anybody ever has any kind of issue with the software, the only thing you could really do is log out and back in and see if it fixes itself, unless it's on my end. But if it's on your end, that's a quick fix most of the time. There you go. Yeah, just, or sometimes I think there's a button that puts the audio back to no audio, switches to audio. Sometimes that'll do the trick. Just play around with it. It's just a piece of software. That's internet software. It's a recipe for problems. That's fine. I get that. That's why I asked right away when you said that, to double check that it wasn't on my end. That's kind of my process. I have to see if it's on my end first. If not, then you got to go through whatever you can do on your side. Now, is this the retest, the 406.85? Well, they haven't really stayed above long enough to call it that. And I have to put that out there. They could stay above right now, but they haven't been above for more than 1 5-minute close, and that's not good enough. Now, if they just eat time off the clock right around here, odds favor that they'll go higher. But if they stay below, I go with the numbers. See, come down again. They stayed above by 2, they closed above by 2 pennies or 1 penny. That's playing games. No, Daniel. Maybe a little lower, but it's still unfinished business. 405.75. I mean, you look at a 5-minute chart and you say, well, they've been above for a long time. And you look at a 30-minute chart and you say, well, they can still spike the low and rip it back up in the other direction. So, you know, maybe you make them go down a little bit lower, but that's still on the table. Don't know that they will do it, but it's on the table if they did do it. Tesla never did it. Nope. It's very slow. Open up for some questions. I mean, could ask anything anyway. It's already like a paint dry situation. Why does the media look at the Dow? Because they always have. And so it's one of those things that they can't change. They don't want to change. They don't even know any different. The general population that looks at the market each and every day, what the gauge for whether the market is up or down is the Dow for the general population, including the media. Why is that? Just it's always been that way, and they'll never change. It doesn't matter. Makes no difference. Because the S&P is a factor of the Dow anyway. When you look at it, you say, well, it's about 10% of the Dow when you look at the numbers. So, and it's going to be up or down around the same as the Dow. And when there's a discrepancy, when there's a divergence, like let's say the Dow's going up stronger than the S&P, you have to realize that that's limited to 30 stocks, and that could be getting dragged up by a couple of names in particular in a specific sector. And that's why it's not a great gauge of the broader market. That's why I don't use it. Michael asks if, given the Apple is weak, does it tell us the SPY is more likely to come down? And the answer is, it doesn't tell us it's more likely to come down, but it certainly gives us a clue that things aren't as strong as they might appear on surface. And I would be cautious, and I would say I'm not going to be surprised if they come down. And that's the way I would look at that. We have a Grateful Dead fan in the crowd, and he's requesting me to play some Grateful Dead, which I wouldn't even know where to find it. So I don't have it. I couldn't name one song, but I know he's deeply ingrained in Grateful Dead. And this is a friend of mine named Mark who's with us today. And he's not a lay person. He's been in the market for longer than I have. He wanted to sniff around, see what's going on. Yeah, Jerome, I just said before that if they can't get above 406.85, the same routine, they still have unfinished business down there, but now you would expect them to go a little bit lower. Expect is a tough word, but now I would likely wait for them to go a little bit lower, spike it a little bit, get in there. How much? It's hard to say. 25, 35, 45 cents, something like that. That might be true, Joel. That's called Murphy's Law. Does anybody know Murphy? Joel says Apple may be weak because I got in at the midpoint. Ha. Right. That's the way it works. Everybody knows Murphy. Murphy's the one where I'm waiting for 45 minutes to get into a trade. I walk away for 30 seconds and they do the thing and I don't get in. That's Murphy. So there's just nothing you can do with the tape in the middle of this range. You don't know whether they're coming down in 5 minutes or going up in 5 minutes. And that's why patience, we're back to that, is essential in this business. You got to wait for them to do something that makes sense to you. You know, I'm just going to do this real quick because it could be the case. The question is this 5-minute close at 406.86 against 85, is that like a tip off? Is that what they're doing? And then they just wait, they eat some time off the clock, and then they come back. Is that the tip off? And I've always thought about that. I don't know. Can't say. I'm just thinking out loud. You know, is a 5-minute close by 1 penny a tip off? It's very hard to say. You know, did you get a 10-minute close up there? No. Just not enough time. Where'd this one close? 86, same one. Okay. Is that a tip off? I don't know. I wish I knew. No, Grant. The question is, do you have a dividend portfolio? So here's the reason why. One of the reasons why. I'm not a holder of equities, whether they have a dividend or not, because, and this is my own personal thing, because if I take a look at, it doesn't even matter what it is. Let's use Apple, all right? And let's use a longer term chart. All right, this is a daily chart. Let's just say, for argument's sake, I thought Apple was going to come down to 150 for whatever reason. It doesn't matter. I'm not saying it is or it isn't right now. I'm just saying, let's say I thought that, and it's at 160. How can I hold it? I can't. And so let's say Apple was paying a 2% dividend or 3% dividend or whatever it was. I don't care about the 2 or 3%. I don't want to ride the equity down because that's an annual dividend. I'll write it down $10 if I think it's coming down. I can't do that. So that's the reason I can't hold stocks for a dividend portfolio. And by the way, in a bull market, that's a different conversation because you can write calls if something shoots up and you can collect dividends. And if the trend is up, that's fine. Am I convinced right now that we're going to take off and make new highs and all that stuff? No way, not yet. So I can't hold stocks like that. It's not in my DNA. Yeah, that's a great point, Mark. Mark says, who needs dividends when money market is paying 5%? But here's the issue, okay? Is the money market safe? And I don't know the answer to that. And I will tell you that in the past, on infrequent occasions, they have broken the buck, what's called breaking the buck in a money market. So the money market's supposed to be a 1-for-1. So you have money in a brokerage account or wherever, and a money market is a mutual fund, but it's designed to be a 1-for-1 with the dollar. So it's on very short-term paper, it's called. But when there's a dislocation in the financial system, like has happened to the regional banks, they can break the buck and it can cause, for lack of a better term, panic. Because you don't expect it. And all of a sudden your cash that was worth $100,000 is worth $97,000 tomorrow. You say, what the fuck happened? So just know that when there are financial issues, it's something to be aware of. Now, you talk CDs, that's different. You know, it's just, there's a lot of different ways to skin a cat. But I just want to Mark mentioned money market in particular. So I wanted to make sure everybody's aware of that it's not necessarily always a free ride if there's a financial crisis looming. And we don't know there is or it isn't, but there could be a banking crisis looming that leads to a financial crisis. You just have to be aware of those things for safety purposes. What about like you see generational lows? I don't know what that means, Anna Shan, sorry. You got to rephrase that one. Backstop on a breaking the buck type situation? Not that, well, Initially, yeah, but if things got way out of control, which I'm not saying, I'm just saying if they did, then at some point the Fed can't backstop everything. Then you have another series of wild inflation that creeps back in. Because the Fed rescuing stuff floods the market. And if you flood the market with money, with dollars, it causes inflation. It's just economics. Whether they flood it for the coronavirus because they told everybody to stay home, or they flood it because they're trying to fill a hole in something. It doesn't matter why they flood it. If they flood it, that's what happens. And here goes the market. Apple's not really participating. A little bit, yeah. Well, they're trying, but they're relative weakness still. But there goes. Like the ones we had in, you mean stocks that you had from really low prices? That's different. That's different. If you have a low cost basis, then you're fine. That's different. If my cost base, okay, let me qualify that. When I discussed Apple before, and I said if I think it's going to go down $10, if my cost basis is 60 or 80 or 85, that's different. If my cost basis is 140, then that's different. So if my cost basis is really, really low, then I can tolerate the back and forth. If there's a dividend, and I can write some calls and all that stuff. But frankly, I'm not doing that. You can do that. I'm not doing that. I don't do that. I would rather just do what I do. Everybody does what they're comfortable with. And nothing is necessarily wrong. It's just my preference. Start closing candles above 406.85, you close, a 15-minute, we'll call it. Forget the 5. 15-minute, you close another one. It's starting to look good for a floater. And then if they do come back for a retest, it's a scalp trade with potential, because you have to be careful that it's not a fake out. That one I would say, I'm going to give you a number. 406.65. They start closing candles below 406.65 even, and you start not to like it. So if they come back for retest and they get below and they stay below and they're below 406.65, you don't like it for the bounce. Make it 406.60. So we put things in perspective. Still a pullback in an uptrend. They could take off today. They could come down lower tomorrow, take off from there. As long as they stay above here, this breakup candle low, that's on the table. It's a low activity day, obviously. Any other questions out there? Can I answer for anybody? If I can, I will. If I can't, I will tell you. So Apple really needs to recapture the corresponding place, if you will, to the SPY would be 160.82. And if they can recapture 160.82, they'll take another leg higher. They don't have to be in the same place at the same time on the chart, just giving you the concept. Let me show you this one, Apple too. This could be one of the reasons why, let me bring it up here. You see this 20-period moving average on the daily chart? It's around the same price, close enough to the other number. Yeah, the closer they get, it becomes magnetic. They want to get there. So I'm not saying that's happening right now. I'm just saying if they start to come down a little bit, that's what's going on. And there goes your spiders. Yeah, just unfortunate that, I wasn't willing to buy in front of the number. I know at least one person did. That's great. It's got a trailer on, but they just really didn't give me a setup I wanted today. And when that happens, I'm willing to take a pass because I'm over the concept of I have to be in a trade right now. Where's the trade? Is it long? Is it short? Here comes your retest, right? So people buy it here because they don't want to miss it. And then all of a sudden this happens, and these are short-term traders, and you look at a 5-minute chart and you say, I'm chasing it, and all of a sudden now I'm out of the money by whatever, 4 or 5 points, and I'm going to lose. And that's the mindset, and that's why we don't chase. That's exactly what happens. I guarantee you somebody in here did that. Guaranteed. Even though I said not to. We don't chase. but I guarantee you somebody did that. And you don't have to tell me if you did. I know you're out there. But the retest is a retest. And we're going to say as long as they're above 406.60 on a retest, meaning they could spike it, then they should bounce it. Unless the market is so weak that they're going to come down and finally do the 405.75. No, Daniel, they don't. That's the whole concept, because there doesn't work that way. Sometimes it does, and then it gives you, Daniel says the breakout traders don't last that long, do they? And I say, no, they don't, because sometimes it works, which gives them the false sense that it works. But most of the time, this happens. And not to say they won't go up later, but guess what? By the time the breakout trader, the trader that tried to hop on, this is what happens. They don't know about this number, most of them, right? Probably all of them, except the ones in here. They don't know about this number. So they don't necessarily know this is a retest coming. So by the time they get down here, they've already capitulated out. They said it was wrong. They're saying uncle, and they'll probably be the sellers that create the liquidity to buy it for the retest players on the long side. That's the way that works. 406.85 is an opportunity if retested below 406.60, certainly on candle closes below there, and it's not a retest and it opens a door back to the lows, 405.75, maybe even lower. That's the way this is, okay? Let me tell you why that doesn't matter, Jerry. Because I wouldn't tell it to you if it wasn't true. And if it's 11 o'clock or 11:15 or 11:30, I'm not interested, because I don't want to be in a trade over lunch, because I have to take a break. And that's why that doesn't matter. I might not take a trade for a different reason, or for that reason. And that is the reason. I'm not willing to be in a trade. I need to take a break. Okay. I'm at this every day from about 6 in the morning, and I have to take a break. And so being in a trade is not important to me. More important to me is taking a break, staying healthy, being sharp. I know what it's like to sit here all day and stare at the screens all day. I just can't do it anymore. I'll give you an example. This is for those of you that are listening out there. Give me an example of why I said what I just said. Because this is exactly what happens. I get in a trade. It's around this time. Okay. Now I really want to take a break, but I get in the trade. Now I'm hungry. Now I can't eat, because every time I walk away, I have to come back to check on the trade. Okay. I can't even make myself a sandwich without worrying about what's going on in the trade. So that's just natural human behavior, right? I'm not going to walk away if I'm in a trade. So now I'm adjusting my day to be in a trade. And what happens if the trade, I don't get out of the trade until 1:30, 2 o'clock? Okay, well, now I haven't eaten, I'm hungry, my day's thrown off, I have to make the video tonight, I have to prepare for the video tonight, and it's more important for me to go with my process, my day, what's best for me for the benefit of you. And those are the integral reasons why, and the real reasons why sometimes I won't take a trade the later the morning gets, even if it's at the number. But I don't want you to think that's the reason not to take it. And that's why it's a tough thing. I want to be in the trade with you, but if I tell you the number is the number and I give you the parameters, it's real. Whether I take it or not doesn't matter. Early in the morning, I'm taking it with you. Thanks, Patrick. I don't know what BP means, Mohammed. BP? I'm sure it's something simple. 406, well, here they go. Blood pressure. Oh, okay, thank you. Well, no, you shouldn't get like that either, because it's a process. And if you're too anxious in a trade, then likely the position size is incorrect, because it's affecting you emotionally and psychologically. And that's important to manage that, including blood pressure. It's all one thing. Remember, if you're taking this trade down here, it's a scalp with potential. But if they get below 406.60, it's not. Meaning they got to stay. They just shoot down. You know, you have to have an uncle point, but it's really on candle closes, because they can test that area, which is only 20 cents, 25 cents from the number, which is normal garden variety behavior. What's a reasonable scalp? Back to 407, 407.10. It's not that big. It's slow. And that's why when it's slow, you don't expect, nor do you get mainly when it's slow, bigger moves. You get smaller moves. You have to adjust your thinking according to what the tape is doing, Eric, but it's nowhere close right now. Right now, what was on the table was a retest of 406.85 and a bounce, got a little bounce, but not much yet. And if they get below 406.60, it's off the table. And you start looking at the development of the day and you say, well, what else we got? Can't really use this low, but you can use these just for the purpose of today and say, you know, that's valid. That it's a general concept. It's not that it's a bona fide trend line on a 5-minute chart to bet the farm on, but I'm saying that's valid, and that's also around the 406, 65, 60 area. So you could see that supports the case. That has nothing to do with why I said that, but it supports the case that if they're below that, then it's not good. So everything falls together. I'm sure the Qs are falling. Slow. IWM was falling. How's Apple doing? Apple's doing okay. See how things change? That's why you don't do something based on something else. I don't like the term correlated at all because nothing is really correlated. Things happen around the same time, but not to the same magnitude, and there really is no correlation. But I watch things for indications, leading, lagging indications, but they're not really correlated. I don't like that word. We know how important 406.85 is. Why? Because we know that just by looking at the chart, by looking at the tape, they tested it, they tested it, they tested it, they teased it, they closed the penny above, they sold off, closed here, got above, come back for the retest. It's important. If they give it up now, that's bearish. Test is one thing, get much below 60, that's a different thing. What happened to that trend line I just had? How you doing? Now it's not to the penny, but it's interesting. This is what we call a rough draft, right? It's not really to the penny. It's not my favorite trend line. It's not, you know, it's kind of a double test here. You know, I'm not loving this. I'm just saying it's something that we know can promote more downside, along with the fact that I gave you the number anyway. What was a low? 66. First they said 65, then I lowered it to 60. It was 65. I gave it a nickel wiggle room. Is this a series of higher lows, or are they going to break that chain? And if they break that chain, they're down here or lower. I have to see how it got there later, Brad. Right now we're in like another trade. There's plenty of people in this trade right now, I'm assuming. I would suggest taking something off the table. 407.20, it's just somewhere up here, just to book something and to turn it into a base hit at minimum, just so that you get something in the books and let it ride. This was what we were talking about. This was the retest. That's why I talked about it ad nauseum. This is the way the market works. You know, I don't like to take 3 or 4 points and whatever. I don't like that at all. But this is the type of tape we have. Sometimes you have no choice. As long as I stay above 406.85, she's okay. Just get a different look, right? Just get a different look. Is this a low? A little sign and signal of a trend change, pseudo, doji, whatever you want to call it, maybe. I don't love those in the middle of ranges. I like them at highs or lows, but it still is what it is. Okay, I'd like to know what we got on the board. We got anybody that's in this thing that took a profit, that's waiting to take a profit? We got players on the retest? I know we do. Yeah, job, Mike. John, nice job. That's perfect. Daniel, it's on the screen. Apple, it's on the right side of your screen. Waiting on SPY and Apple, meaning you're long or you're just waiting on something else. David, nice job, Jeff. There's nothing wrong with 4 points, by the way. I shouldn't have minimized that before. There's nothing wrong with it. I just like to get you folks in trades that have more potential. So this one does have more potential, but the market's so slow that you have to book something. There we go. Let them go up a little more. Okay, good, David. I just didn't understand. That's fine. Good. Waiting on could have meant waiting on lower prices, but waiting could also mean waiting for the more profit. So I didn't know. Okay, so we had a fair amount of people on the retest. Nice job. This is what we designed before. Think about it. Once they were here, I said, actually here, I said, if there's no buy down here, there may be another one if they get above and they come back for a retest, right? We said that back here. And that's what they did. Why did I say that? Because they do the same shit over and over, day in, day out. Doesn't matter what the number, it doesn't matter what the name on the chart is. This is the way the market works. And then you look for supporting information. That's why I look for this. And I said, well, you got a trend line, so that's a safety net. They came down to retest it, which was around the same number I gave you before I showed you the trend line. Wasn't the trend line reason, but that's just the way it works. I mean, so good. If they get above high a day, 39, 407, 39, there's another leg coming. We don't hop on here. The traders that did sold it here. I said it before. They're the liquidity. Did you see how quick this candle came down here? That was the stops on the futures. I never show a 1 minute chart. That's 1 month. I don't even know how to get a 1 minute chart up. There. See that? Those are the stops. That's liquidity. Right to the number. Back up. Stick around. You'll learn more about how the market works in a couple of weeks than you'll learn anywhere else. Most anywhere else. It's different when you look at the market and you say, oh, this is what they're doing, versus looking at the market and saying, oh, they're falling, they're going to keep falling, I got to get out of this. Totally different viewpoint. There's your Apple bounce. I said they get to 160, 150, give or take. They will. Not participating all of a sudden. Interesting. And now the Qs are. So you see that flip around? It's over, Mike. That trade happened. First time, best time. Second time, different kind of risk. So Mike's asking about buying 406.85 again. How far do they have to climb, or can you just buy it again is really the question. Either way you want to pose it. And the answer is no, it's too late. It's already happened. That doesn't mean it won't work, but it's not the same trade. Not even close. First time, best time. Always. And there they go. Even on a slow morning, when we thought we missed a trade, laid it out. A lot of you got it. Fantastic. Doesn't matter, it's not a big trade yet. Doesn't matter if it doesn't even turn into a big trade. It matters is the process that we use. And we watch the market and we only take the trades that make sense, at least to me, right? 405.75 made sense for its reason. The retest of 406.85 made sense for its reason. And everything was laid out long before it happened, because the same stuff happens all the time. And when it doesn't, you could recognize. So when I said, if they get below 406.60, something else is developing. It's not the same. It's no good, because that changed the retest into a potential retest to the lows and lower. And after developing an uptrend from an intraday perspective from the low, if that's broken, that's a different tape. There we go. All right, now we're talking. So we got people in profits. Now you got at least, what, 7 points? At least, think. 6, 7, at least. That's if you bought 406.85. You bought a spike, you got more. I'm gonna take a break in a few minutes. Let me say it one more time. What do we got going out there? Tell me if you're in. Don't tell me if you're not in. Just tell me if you're in. And even if you told me before, I want to see it again. Nice job. There we go. Now they roll in. I love it. I love it. Done already is good enough for me. That's fine, Jerome. That's trader's choice. That's fine. And I say it all the time. One of the hardest things to do is hold the runner. But if you can just try to do it, you never know how high they're going to go. You never know. You don't know that they will or won't fill the gap today. You come back at 2 o'clock in the afternoon, they might have filled the gap. Who knows? Yeah, whatever your fancy, Jeff, that's fine. Because that may be, you may be trading a bucket full of contracts. I get that. Whatever it is. Not that many, Mark. Not as many as people would think. But this trade may not have the room. Thank you. I'm not sure what that means, Jerome. I think you might want to rephrase that. It's a little jumbled. I'd like to hear I want to read what you're talking about, but I can't make it out. Well, slow doesn't really matter if you're long. It matters more if you're short. But slow doesn't matter. If you're long from 406.85 and it's a slow market, who's to say they can't grind up another dollar or two? How do you know that? And if it's slow, what's the difference? That's the difference in a slow market. If you're long, it's okay. If you're short, it's like torture. Well, you're not stuck if you're in the money. Stuck is when you're out of the money. You're not stuck in the money. Stuck, you're waiting. I mean, in the money, you're just waiting. When you're in the red, you're stuck. That's really the way it is. It doesn't, if you don't want to be there, then you get out and you go about your business. But if you're long and you're in the money and you're just holding a trailer, then there's no stuck and you're just waiting. This is a good trade now. And then I know there are people in there that just couldn't do it, even though I talked about it all the way back here at 9:40, 9:50 in the morning. I talked about it and I waited and waited and waited until they did the thing. But when they're doing the thing, a lot of you still aren't convinced that they're doing that thing, even though I said it, because you don't believe it yet. And that's okay. You're new, or you're still trying to figure out if I know what I'm talking about, or both. And I get that, and that's fine. The more you see it, the more you hear me describe something that's going to happen, and because it happens most of the time, and then when you see it unfolding, you'll start to believe it. No, I've seen this before, like 10 times over the last 3 weeks. That kind of thing happens. The spike the low and rip it back. They didn't do it today, but how many times do we see that? All the time. So this one was different. This one was the get above the pivot and come back for the retest. Should write a book of these. Nice job, Dan. No, Mark, you don't have to study it. I'm not going to tell you. That's my secret sauce. Yeah, I want a sandwich too, John. Nice job. Great job. Yeah, I know, but there's certain things that I just have to, it's too, it doesn't work. I can't, Mark's asking where 406.85 comes from. I get that. But it's a combination of everything I teach every night and in the course. And then what I see going on in the pre-market, when I see where price is based on the numbers that I know are important, I'll determine where the tape will turn bullish or bearish early in the day. And that sets the tone for the day. And it's not always 100% right, but the numbers are the numbers. And the numbers honestly come from everything I teach. And even some of the other things, and who was it? Was it Anishan that sent me that stuff on the VWAP? Was that, I can't remember. Was it Armand or Anishan? I'm getting you guys mixed up and I apologize. Who sent me the VWAP stuff? I think it was Armand. Now I don't remember. Either way, it was close. So I don't have a patent on everything. I just do what I do and it works for me. And I'm just trying to pass it along to you. That I can't teach you all the things that I'm looking at to determine the pivot because it's different every day. And there is no formula. I wish there was. There's no formula. Yeah, I'll do Amazon. Well, they're headed for 102 if they continue. Can't jump on for 102. It's not enough, right? You're not going to jump on saying, all right, well, they're going to get up to the gap. But as long as they stay above, call it 170, 100.70, as long as they stay above 100.70, they're okay. It's best I can do on Amazon. Listen, Mark, you miss out on 100% of the things you don't ask for. I get that. There's no formula. There's no easy answer for that. That's one of those things that, like, it's taken me a really long time to figure out some aspects of what I do. And there's certain things that I've figured out that make it possible to do what I do, and that's one of them. In other words, if you ask me, let's just say 10 or 12 years ago, what the pivot was, I don't know. I figured that out more recently than not, how to do that. There is no secret sauce. It really isn't. That was just a joke. There is no secret sauce. This is just a combination of experience, watching the market for a long time, understanding. See, when you figure certain things out, now the next thing you figure out is a compounding effect. It's not a 1 + 1 = 2, it's a 1 + 1 = 3. So if I figure out A and then I figure out B, it doesn't just equal C, it's like a whole big deal because it opens up the can of worms to something else and it just never ends. I'm forever trying to figure stuff out, forever trying to figure stuff out. And I will never figure it all out. I'm aware of that. I will never be able to figure out the whole thing. I'm confident of that. But that's the challenge. So now all of a sudden the Qs have taken somewhat of a leadership role intraday, and the IWM and the spiders are just eating time off the clock. And the Qs were weak before, and now they've turned around. It's just, you don't know that's going to happen. That's why we don't use one thing to make a trade off of something else. It doesn't work. Hold on, David, I'll give you that answer. Well, let's say this. If Tesla can get above 180.68, what were you saying? All right, we'll use 68. 84, sorry. Use a high a day. Oh, well, that's the recent high. If it could start, okay, 68. If it could get above 180.68 on candle closes, it's going to open the door for 183.85 or more, or the gap. Okay, that's Tesla. Any other questions out there? Oh, here's one. Nobody has most of the market figured out, Mark. Nobody. And certainly, no. Just, there's people that have an understanding of how it works. I don't know anybody personally that thinks of things the way I do. Okay, Daniel, what did I say? I'm teaching you. What did I say about 10 minutes ago as it relates to a short trade? Grace is asking, is it bullish if it drops below 4? No, yeah, it's as long as you're above 406.85 is the number. But you don't want them, if you're long, you don't want them back down there, obviously. Okay, if you're long, you've taken a profit, and that's your uncle point at this point, is around your buy price, maybe slightly above, slightly below, but that's your uncle point where you're not going to let the trade go bad on any portion of the trade. But no, it's not negative just because they got below the former high or anything like that. At this point in time, at this point in the day, you're looking at it like this, and you're saying, well, unless they fall apart, they're creeping up. This is the hourly chart. And you look at a half-hour chart and you say, well, what are they? They're trying to creep up. Look, these moving averages are magnetic. They're going to pull price in. Same thing with the 20-period moving average here at whatever it is, a little short of 408, right? That's what's going on, the big picture. They go back and forth is the normal course of how the market works. You're welcome. Some of you, Joel, not all of you, some of you, but a little at a time is fine. And back to, if you didn't get in on the trade because you didn't think it was going to work and you got scared and market was coming down, because you think if the market's coming down, it's going to continue coming down. That's a natural thing to think before you realize that they're actually going to do something. What they were actually going to do was run a test of the pivot. And I'm back to, once you see things work several times after I've described them, I describe it, it happens, even though you don't believe it's happening at the time. But then after the fact, you look back and say, well, yeah, it's pretty much what he laid out. And even though in the heat of the moment, you have these doubts, that's normal market psychology. That's, our brains are wired a certain way. And the hardest thing to do from a psychological perspective in this game is to rewire your brain to think differently. And the only way you can do that is by seeing and understanding. And so I describe, then you see it, then you understand that they weren't just falling out of bed. They weren't collapsing. They were actually just coming to run a test, because that's the way the market works. Normal garden variety markets. And the more you hear me say that stuff and the more you watch, the more you have an understanding of what's actually happening. And that in lies a different comfort level getting into a trade. That's the key. You have to rewire your brain. We're already in a trade. Mike, you're either long right now waiting for higher prices because the door's open for the gap technically. Come back for the retest is not a trade because they already did it. Second time, no good. First time, best time. And that's it. So you're either long or you're going to lunch. Yeah, no, you got it quickly, Eric. I think part of it is this. So some of us have been, regardless of how long we've been doing this or trying to do this, we've learned certain things. And some things we have difficult time unlearning because we still think that they're valid things, because they talk about them on TV, or it was told to me by someone that I think is, because they have a website or a newsletter or a blog, that they're right, and all this stuff. And so sometimes if we just, and this is what Eric was talking about, he says, I got it, what you're saying, after a few trades, I kind of got it right away. And he did. And the reason is because some of us are able to just put blinders on and just take what I say at face value and forget about what somebody else said or is saying or taught you or has a theory on or uses a certain indicator. It may work some of the times and it may work for them all the time, but I'm not them and I do things my way and this works for me. And if you take what I say at face value, most of the time it's going to work out. There'll be losses, not that many. And you know that if you've been here for any period of time, there's some of you that have been here for a while. And let's just say from the beginning of February, sometime in January through now, how many losses have we had? It's less than a handful. That's a small hand. There'll be others, but most of the time it's going to work out. Even if it's just for a scalp, most of the time it'll work out. And when they start not to work out because what I do doesn't work, then it's over. But that's not going to happen. This has been going on a long time, way longer than me. Just because I figured something out a few years ago that compounded what I already knew doesn't mean that didn't exist decades ago. I just didn't know about it. And that's the truth. It's not things, it's no secrets. There's no secrets in the market whatsoever. It's just things we haven't learned yet. That's it, folks. I'm going to take a break for a half an hour. We'll be back at about noon and we'll give a look-see. As long as we got one, it's good. All right. Back at noon. Appreciate everybody. Thank you. Yeah, I haven't even taken a walk. I got to take a walk. I'm going to get something to eat. And I'll come back at noon to see what's going on. If you're long, you stay that way. I know it's hard, but try. Be back. Oh, yeah. Don't do anything stupid. Thanks, Daniel. I'll be back. All right, folks. Late afternoon, a little late. Sorry about that. So the trade's over, right? So the long trade was over. So we were instructed that nobody was to let the remaining portion of their position go bad on them. So here we are in a situation where when you look at it now, you say, all right, let's look at the hourly chart. We'll compress it a little bit and we'll say, now they're just making a bearish pattern. They couldn't get going. They found resistance up here and now they've come back down and they couldn't get going. So now it's a bearish pattern. Maybe they try again later. Maybe they don't. But now anything else on the table for this afternoon would be a spike of the low into this zone and you'll still find support in that zone. Where exactly is an open question, but you'll still find support in that zone if reached. It's just a mush market. There's no conviction, floating around, down a couple and a half bucks on the day. It's not that big of a deal. It's just what it is. Anybody have any questions out there? Anybody hear me out there? Bueller? Yeah, I got it. Okay, Eric. Good. Okay. As long as I know I wasn't talking to myself. That's basically the story. Yeah, it's a good day to do something else. At this point, if you got a base hit or a double or whatever it is to you off the retest of the pivot this morning, then that may be it for the day. Maybe. And that's fine. You want to sit around and wait for them to come into that zone and take a crack at it for a bounce back? I would wait for them to go below 405.75 personally. If I was going to do that, you don't have to wait for 404.50, but somewhere else in the zone, you know, it's potluck. You don't know exactly where they would go. Yeah, that's exactly what I just said, Dan. You're 100% true, 100% right. Exactly. I think that's fair. 405, 405.10, 20, 15. That's a better opportunity. You're closer to risk, meaning you're closer to 404.50. That's really the line in the sand. Not intraday, but on daily close. But intraday, if visited, you're likely to find a bull bear battle going on down there. I don't know if they'll go down there. It's very slow. This is going to be like, if you look at the average, I'll give you an example, talking about volume for a moment. And if you look at the average volume is right now about 93 million shares, give or take. I think that's an average of 60-day average. So it's a decent average. And you're going to be, you were below that the last 4 trading days in a row, give or take right around 60 million. So that's almost a third, or let's call it a third below. And you're going to be about there today. So what does that tell you? What happened over the last 4 days? 1, 2, 3. Well, 1, 2, 3, 4. No, it was this one. 1, 2, 3, 4. There's nothing you can tell from the daily chart. You had 2 up days and 2 down days, and one of them was slight. So that doesn't tell you anything. I was just trying to see if it told us anything. I was doing it in real time, and it doesn't. So it's just light volume. It's just a pullback and an uptrend until it's not. I'll go with that, what I said earlier today. May not feel like it intraday, but that's what it is. Normal garden variety stuff. Anybody have anything out there before I sign off? For a slow day, it wasn't terrible. I'll give it a minute, see if anything rolls in, minute or two. Good, Mark. That's fine. I like that concept. Green for the day. We'll do it again. For an exit point, Shannon, where are you long from today? Early? Well, I'll give you some stuff. So right now, they're eating time off the clock. We're talking about UNG, folks. Shannon asked about UNG. From an intraday perspective, I don't know why that's red. Something must be on the chart. I don't know what that is. See this 30-minute chart? They're just eating time off the clock to make a run for the breakdown candle high. What's the high? 694. So you would be out at 690 if you're looking to get out today. If not, you'd wait, see if they can get to $7 or more. You're long from last Thursday. This is bullish right now. This is bullish. I'd hold it. See that hourly? They're just eating time off the clock. They come below today's low. That's different. Then they can fall. It's hard to say. It's bullish right now. Apple. Let's see what happened there. What was the target? 161.50. What was the high? 161.61. So that deserves a funny how that works, doesn't it? So we had Ron made some money on that and exited at the right place. Well done, Ron. It pays to know your numbers. Quick base hit. Nice job. Anything else out there? I'm going to give it a wrap, folks. We'll come back tomorrow, excuse me, in uniform, ready to go. And you take what the market gives you each and every day. We're not going to wait around for him to come down to 405. I'm not. If you choose to do that, it's still an opportunity down there, give or take, wherever they go. Somewhere in that zone, they would normally bounce. Okay. That's all, folks. Appreciate everybody. Back tomorrow in uniform, ready to go. Thanks, Daniel. Thanks, Grant. and enjoy the afternoon. It's going to be a long week, so we got a full week ahead, and we'll take it one day at a time, one candle at a time. Appreciate everybody. We'll see you tomorrow. Enjoy the afternoon.